Howdy doody dandy. That's right. That's what I said. That's what I said right now. We're going to be talking about Walmart today. Reported earnings before open, obviously, as we saw. So, obviously, one we've been looking at. Very excited about looking at these earnings to see what's going to happen here. But you see, as a result, the stock's down 5.5%, so it's worth looking at. I anticipated a beat on an EPS standpoint as well as a pretty darn good beat on a revenue standpoint. So it doesn't appear that happened if you see the stock down by a significant margin, but we'll take a look. So, yikes! I see where some of the dilemma might be. A quarter four non-GAAP EPS of $1.39 misses by 12 cents, and actually a GAAP EPS of negative 74 cents is a miss by $2.24. What? Seems incredible. I just don't see how that's feasible from a GAAP profitability standpoint. How that's possible, but we'll look further in. It just seems a little crazy to me. But revenue did do what I thought it would. I said it would be over 150 billion. They managed to do it. 152.1 billion, up 7.3% year over year, which is massive for that dollar amount there. Is a beat by 5 billion. So definitely mixed in terms of that. The revenue it's an incredible beat. I mean, it's an absolute smasher. But that EPS line is concerning because you wonder how in the world did they make that happen? I don't know. We see the guidance here. Oh, okay. Guidance here. Expected for the full year, low single digits for Walmart and Sam's Club as well. International sales expected to decline in constant currency. Let's see. Operating income is supposed to increase slightly. Effective tax rate, yeah. EPS is expected to decline slightly. So we'll look at that and see how that goes. We also got a dividend lift, as they do every single year. They lift the dividend by a cent, which obviously isn't crazy, but it's a 2% increase. Nothing wild, yielding 1.5%. I mean, it's pretty good for what it is, for sure. So not too bad. We'll take a dividend raise. You know, consistent since the inception of the dividend. They don't stop raising the dividend. So, we see obviously some interesting sales numbers here. Walmart U.S. comp sales increased 8.6 versus a consensus of 5.8, which is massive. Sam's Club saw 10.8% versus a consensus of 8.3. Segment revenue, Walmart U.S. was up 7.9% to 99.5 billion compared to 97.5 consensus. International up 5.5, beats the consensus by $1 billion. Sam's Club beats the consensus by around 200 million, up 8.1%. Membership income saw a slight beat on consensus, but up 2.9% as well. Crazy. Walmart U.S. e-commerce sales grew 69%. I thought that number would be a little bit higher, actually. I thought it'd be closer to the 100 mark, around 90, but not too crazy when you see the revenue beat, how incredible that is. I think it shows traffic was probably doing pretty well, so we'll see that. And Sam's Club e-commerce grew 42%. Kind of a lackluster .com for them, so something they probably need to work on more for sure. Gross margin rate was up 30 basis points, which is nice, right around consensus. And they obviously increased the dividend and approved a $20 billion share repurchase program, which is pretty nice. You got to enjoy. When they're repurchasing shares, typically it means that they think there's some value there. So yeah, overall, though, expected a decline in fiscal year 2022, which isn't that crazy. I mean, I could have told you this. They are expected to see a 2% decline for the full year, which isn't a shocker because it's a year in which they increased sales by over 10%. So when you put that into perspective, it's still year over year they increased significantly if you're looking from 2 years ago. So there is going to be a decline expected, but it's because you're not going to have the significant rush that we saw this year. It's not going to be that way. So once demand returns to a state of normalcy, it's going to look as a decline year over year, but still be a massive increase over the year prior when we're talking about 2019. So something you need to mention there. Looking at the press release, seeing if we can see what we got going on here. Obviously, we saw some increase in associate wages. You saw that. This gap EPS line of negative 74 cents is interesting, though. They say that the decision to repay property tax in the UK lowered it. So we'll see. I want a more refined look here to see what we can see. But obviously for the next year they're expecting to make some investments, $14 billion in capital investments to build supply chain capacity and automation. Obviously talking about not only trucks that drive themselves, but delivery as well. So 48 straight consecutive year of dividend growth. You gotta love that. So I mean, you gotta love it. There's no other things to say. For the fourth quarter highlights, we saw most of this already, so nothing too crazy. I wish they went more into line on this gap EPS line. I really want to know. But a loss of our operations held for sale in UK and Japan of $2.66 makes sense. Net gain of 49 cents on equity investments from JD.com. I mean, I don't know. I'd like to see some more quality stuff. For the full year, though, we saw a total revenue of $559 billion, an increase of 6.7% year over year. Crazy stuff. That's a crazy increase when you're talking about the dollar amount there. Holy crap. That's pretty crazy. Yeah, and excluding currency, obviously up 7.7%. So, when not on a constant currency basis. So, pretty crazy. Comp sales increased 8.6. E-commerce sales grew 79% on the year. Which again, that's a segment that's going to continue to grow when you talk about not only Walmart Pickup, but now with Walmart Plus, as well as every other really option they're offering here. From 2-day delivery to starting on same-day delivery to grocery delivery, they're working on all of it. For the full year, Sam's Club saw a comp sales increase of 11.8. Membership income increased 9.4. Walmart International sales increased only 1% on the year, which isn't crazy. Not too crazy there. And the thing is, for the full year, though, they still saw a gap EPS of $4.75. So the gap EPS line was fine for sure until this quarter. So clearly it was definitely that property tax they're referring to. I think there's got to be more into it, but they've been crushing the walls, or crushing the walls. I guess that's a thing I can say. They've been crushing the watermelons when it comes to gap EPS for the year. So nothing too crazy from a free cash flow standpoint. I mean, crushed it year over year. Nearly doubling what they're doing. It's crazy stuff. Crazy freaking stuff. A lot less share repurchases this year, but again, they're going to boost that up now. So we'll see what that looks like. And we saw for the guidance, nothing super exciting, One thing obviously worth looking is transactions and average ticket. Okay. So overall, transactions fell 10.9% on the quarter, with an average ticket increase of 21.9%, which is significant. That's freaking significant right there. That's a big increase overall in terms of that average ticket price. What can I say? From a Sam's Club perspective, it is a little bit weird. 8.4% increase in transactions, actually, and average ticket went up 2.2. So that's what's weird how that was able. Again, it's a less saturated market, I suppose, so that's how they were able to increase transactions. But every other company right now is seeing a decrease in transactions. Let's look at the balance sheet. See if this quarter impacted it too much. It shouldn't be because it's a year-over-year comparison. I'm expecting good things here. Total current assets in at 900 billion compares to 61 billion of the year prior, 61.8. Most of it due to an increase in cash and cash equivalents and prepaid expenses. Total assets in general sitting at 252 versus 266 or 236 of the year prior, so an increase there. Total current liabilities coming in at 92.6 billion versus 77.7 billion. So nothing too crazy. Long-term debt didn't increase either. So one thing you need to notice, the stockholder equity has increased. It's at 87.5 billion compared to 81.5 billion. So there's an increase here. The overall balance sheet grew as well. It's overall pretty good. Nothing bad to say about it. Really, I have nothing bad I can say about that. What I do think is kind of wild is the reaction today. I mean, I get it that you're going to see an overall decline in net sales, but it's not unexpected. You're coming off a smasher of a year where you saw a 7.7% increase in sales. I think the valuation on this thing is a little cheap. We're talking about a market cap of $390 billion, but the company it brought in $560 billion last year. A PE ratio of 20? This is a company that's increasing sales. I mean, I don't know, what are we going on here? And a good dividend yield. This is an absolute great value play right now. If you're looking for a steady rock, good dividend, this is a great value play for you. Again, this is my largest holding, so I wish it was going up. But heck, I'm okay with buying more. It's my largest holding by far, but shoot, what's going on here? I don't think this stock should be down today, personally. It's 100% a reaction just to the guidance. I get that, but what can you expect? You can't expect a continuous increase off of a year that has been unprecedented. It was an unprecedented year in terms of demand. So it's not unexpected that you're going to see a decline the next year. So, again, people are just a little... I don't think these people... They don't get it, okay? These people over here, these big cats at Wall Street, they don't understand numbers. It's a thing. They just probably need to get educated more. I'll teach them whatever I need to know, but, I mean, come on now. It's crazy stuff. Crazy.